Hi, it's Phil at 11 Shares. Hope you are well. This video is just going to be quite straightforward on what the differences are between investing and trading. So, what is the difference between investing and trading, and why are they called different names when essentially you are just buying and holding and then selling an asset or a currency or a commodity or some financial instrument, all with the aim of making a profit. So both approaches to the stock market are the same. You're trying to buy something cheaper than you can sell it for eventually. Excluding the likes of short selling and things, but we won't touch on that just yet. So what are the main differences? Well, I think there's three differences. First one I'd like to touch on is time frames. So with an investment, you are looking at years. You are looking at no limit on the time frame, but definitely over years. Things can change with an investment where you do cut it and sell it before a year's out, but what you tend to find with investors is they don't want to be checking their account each day. They don't want to be having much interaction with buying and selling. They are looking for a good fundamental business to invest in, and they want to buy it at a price that they think is fair and hope that that business grows over a number of years so that they can sell it eventually for a profit. That's what investors do. They buy, they sit on their hands, they're patient, tends to be over years, and then they can sell years down the line for a profit. Now traders, almost completely opposite in most cases. Trading can be done over minutes, seconds, days, weeks, months, but they tend not to go over years unless people make mistakes, but we won't talk about that too much. But it tends to be shorter time frames. They want to be in and out of the market as quickly as possible. They want to make their profits as quickly as possible to then move on to the next opportunity to then make more profits. So that's the first thing, time frames. Second thing I want to touch on is risk. I think more risk-averse people and less educated in trading people tend to invest. So investing in terms of 2-3 years gives a business an opportunity to go up, down, the market to go up, down, and potentially not be as risky or as important to worry about the noises of the market and the noise of short-term price movements. So within risk of investors, you tend to find there are still risk levels. There are high-risk investments. There are low-risk investments. But you find investors are looking over a long period of time. They normally have a diverse portfolio to cover all sorts of eventualities, and they're looking for smaller gains over longer periods of time. So they've got a bit more risk balance within investing. Now, traders, and this doesn't count for everyone again, they tend to want quicker wins. They will take more risk to get these wins. Now again, it doesn't count for everybody, but you will find that when you're in and out of the market and you're looking for opportunities thick and fast, and you are looking for potential bombed out shares that have had a rough ride of news, and you're looking for reversals and things like that, all these strategies carry a lot higher risk than some long-term investments, or most long-term investments. So yeah, I think risk is another big thing that's a differentiator between the two. And then thirdly, analysis. So when you're looking for an investment, you will look at the fundamentals of a company or business. You will look at what money they're potentially going to make, what debt they've got, what their future plans are. Lots of bits of data on fundamental information of the business and how it operates. You are basing your investment on that information pretty much alone. You don't tend to look at charts and do technical analysis within that, because you are going to give it the time to grow, you're going to give it the time to improve. You are not worried about the short-term price of that share. Flip that over to trading, and within that trader's analysis, you are going into charts. You will be looking at all sorts of indicators. You will be looking at different time frames from minutes to weeks to days, and you will be pulling all this information together. And a lot of people do just completely ignore fundamental data for trading. They'll just look for technical analysis within that. We do it slightly different, or I do it slightly different, where I use fundamental rankings as well as technical analysis. But that analysis method is different for both. So Which one's right for you? Who knows? I think educating yourself in both ways of investing and trading is very important, and I think it's a good thing or interest to have. So please use the information that you've got on 11 shares, have a look around, see what you think of our fundamental analysis, and then get involved with some of the technical analysis stuff to push on your education. Any questions with that, please get in touch. Thank you very much.